Before you can start gaining, you must learn how to limit your losses. Easy to say, very difficult to practice, but it's all a matter of practice and risk management. Hey there, Tamir from Fibonacci-Traders.com here with the daily market recap. Please hit the like, subscribe, share with friends. Let's see the charts. Once again, a very tight price range on the SPY. We had to wait for the final hour for something to happen, and bulls came in strong on the final hour, breaking up and above this downtrend blue line. So on the positive side, we broke a short-term downtrend. We are in a very short uptrend channel. As you can see, there's both white trend lines. Let's see if we can go up and retest this upper white trend line. We can take Fibonacci, swing low, swing high. As we can see, 401.80, tough resistance. It was support, resistance, now resistance. Breaking up and above, we might go all the way to 408, 407 area over here together with this white trend line. But on the other side, we have an open gap to the downside, and we know that more than 80% of all gaps will get filled throughout time, and this is a gap to the downside. So for the bulls, it's better sooner than later to close this gap. QQQ 313, once again acting as a very tough resistance. We have a gap to the downside also on the Qs, not surprising. So let's see this gap getting filled, and then we might get a break up and above the 313, finally going all the way to 320. But if this gap will get filled, and it will get filled, it's a matter of time, 308 needs to hold, otherwise we will get meltdown towards 303 and maybe all the way to this yellow trend line that will act as support because it was resistance. It's all a matter of the relationship between price action, Fibonacci and trend lines. What was support will become resistance. What was resistance will become support. That's it. Looking left, identifying where price was, where it is now, and where with high probability it will go next. IWM, still another doji between the 170 and the 177. Nothing interesting on the IWM. Long above 177, short below the 170, in my opinion at least. And as you know, everything you see in here on this video is for educational purposes only. Always do your own due diligence. Never follow blindly anyone on social media, paid or free services. Learn, educate, get ideas, but in the end of the day, it's your money. You are the only one that is responsible for your money. Dow Jones, we have this blue trend line. This blue trend line, once again, acting as resistance. As you can see, since February's highs, doji, doji, another doji. Now let's see, bulls of Dow Jones, can you break up and above this blue trend line, or once again you will give up, going back to 320 as the next support? Bitcoin, another day, another doji, failing to close above this red trend line and the 28,800. So for now, we sit on hands. You can take this trend line over here if you want to be a little bit more accurate. It's not rocket science. It's only candlestick analysis. It's an area of resistance. You can put it here, you can put it here. It doesn't matter. It all matters if you're trading candles or according to the line chart, which is much more easier on the eyes, cleaning the noise And as you can see, very tight price range since middle of March, 2 weeks already, between the 27 and the 28,500. Ethereum also, we can see a very tight price range between the 1700 and the 1800, and for now it looks like bulls are starting to give up on this very tough resistance area, and we might get a meltdown towards retracement, meltdown, pullback. Doesn't matter, we are going to retest the 17K together with this white trend line. We have small broadening formation inside a very big broadening formation. Follow price, trend lines, Fibonacci, that's it. No other indicators are truly needed, not even volume, because in the end of the day, everything follows price. Natural gas, we have trend lines, downtrend channel helps us to identify the trend. And for now, until proven otherwise, it's a very steep downtrend. 210 needs to hold, otherwise 190 is the next support. Trend reversal to the upside only above this red trend line together with the 227, at least 2-3 days above this area, then we can start thinking of a trend reversal to the upside. Oil, crude, downtrend, bounce of the blue trend line. This blue trend line held the lower lows, bounce all the way to 618 Fibonacci level. Look left, this level was a very important level of support. Now we can assume it will become a very tough resistance. If bulls of oil have enough power in their hands and will manage to break up and above the 74 area with high probability, we can assume this yellow trend line will be next. Gold price range is getting tighter and tighter. Inside candles, dojis, indecision in the market of gold. So we need to sit on hands and wait for gold to let us know where price is heading. Can we get a bounce towards this red trend line? Long, in my opinion, and it's only my opinion, above 1980 towards the red one. Short, once price will break down and under this white trend line. Next support 1930, and all the Fibonacci levels to the downside will act as future support. Apple back above this trend line. Fibonacci, swing low, swing high, 168 to the upside, 158 together with this red trend line to the downside. But overall we can see that Apple basically is bouncing between the 156 towards the 162 in the past few sessions or so. Let's see where Apple is heading. To the upside above 162 towards this red trend line. To the downside, if Apple will close the week below this red trend line, we can assume that this blue trend line will be next. Google holding above the 100 area. 100 was a very important level of support and resistance throughout September, October, and beginning of 2023. Now it needs to hold. Can we get a bounce back above the 102, 103 area towards the 106 and maybe 111? Or if bulls will give up, 95 and maybe all the way back to this red trend line. NVDA continuing to grind up slowly. So if you are already in a long position on NVIDIA, congratulations. Manage your risk, because price action is getting tighter and tighter, and we have several dojis since already 2 weeks of dojis inside candle, so the battle between buyers and sellers, bulls and bears, are immense. One of them will give up. If bulls will give up, it's going to the downside all the way to 242 will be the first major level of support. If bears will give up, we can assume with high probability breaking up and above this white trend line towards 291 and maybe all the way to this white trend line. Microsoft basically moving sideways, bouncing between the 274, 283. If you are long on Microsoft, congratulations. We had a very nice bounce since the 245 towards the 283. Manage your risk, manage your stop loss according to the levels. If you are not long yet on Microsoft, I would wait for at least a break up and above the 283 towards this red trend line. Next is Meta. Another day, another doji, another indecision in Meta. And as we always say, if market cannot decide, we surely cannot decide if to go long or short. So we need to wait. Wait for what? Short, breaking below the 199, long above the 208. But as you can see, price is below this trend line. So pay attention if bulls will give up. We have this gap to the downside at the 183 and it will get filled. The question is, if this gap will get filled, is this gap going to get filled? Let me know in the comments below. What do you think? Is this big void of Meta to the downside at the 153 area will get filled? Let me know in the comments below. Very interesting to know. What do you think? Tesla, sideways move, holding barely the 188, 195 now. Very tough resistance. As you can see, Tesla, bears and bulls are fighting for price. If bears will win, this gap to the downside will get filled, in my opinion, very fast. And if you can see, zooming out a little bit, we have high, lower and lower highs. This is not a good sign for the bulls. So if bulls wants to avoid this gap, they need to wake up and close at least a week and a half above this trend line. Netflix, nothing much, circling around the 330 area. Doji inside candle. 3 days of indecision in the market for Netflix. Not surprising, taking into consideration the overall conditions in the market. Let's see if bulls can break up and above the 340, then we can assume with high probability 354 and 380 will be next. If bulls will give up, 370 needs to hold, otherwise 302 is next. Shopify finally breaking up and above this area of resistance, closing above it. It broke above it several times in the past, but failed to close above it. Now, finally closing up and above and closing at the high of the day. Very bullish sentiment in this candle of Shopify. Now, all we need is continuation. We need this area of the 46 to hold as support for the next candles. And then we can assume with high probability this gap over here at the 50 will get filled. Amazon, looks like Amazon is starting to wake up. Bulls of Amazon are starting to wake up. 97 held very strong in the past 2 weeks. Now let's see if bulls of Amazon can take us all the way to 103 together with this upper red trend line. Overall, Amazon is in an uptrend, short-term uptrend since beginning of January. This trend line helps us to identify the higher lows. It's all a matter of the relationship between candlestick analysis, looking left, where price came from, what are the trend lines that are relevant for us. Fibonacci help us to identify potential support and resistance for the future. That's it. So I hope you found this video helpful. If you did, please hit the like, subscribe, share with friends, and don't forget to check the links in the description below. Choose your plan. Pave your own path to become your own indicator. Until the next video, stay safe.